Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Friday. Ladies and gentlemen, and well, the markets are quiet today because the US is closed. However, the rest of the world is still operating, right? So look, we'll have a look at what's happening. We'll see what's happening in the commodity sector, in the currency sector. There are a lot of shifts here and there, but hey, stick around. Hopefully you'll enjoy the session, and I'll see you in a bit. Okay, hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen, the 4th of July. So we have the US markets closed, but the rest of the world is still operating and working. So yes, ladies and gentlemen, welcome to this somewhat of a casual Friday, I would say. So yeah, look, we're going to look at the markets. We'll wrap up the week, see what happened. How the economic data went through. So yes, look, before we jump into all that action, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I will also put my usual good morning in the chat room. Good morning, everyone. Yep, there we go. So yeah, ladies and gentlemen, I hope you had a good week. I hope the week was generous to you. If not, look, there's always next week. Hopefully you have your risk management in line. So yes, so that you could at least attack the next week. Now look, also just before we jump into the charts, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So ladies and gentlemen, let's have a look at Nikkei225. I'm looking at the cash index here, and what's interesting to me here is that we kind of drifted back below this territory, or should I say actually on the contrary, we remained below this key area of resistance. Now I talked a lot about this. Initially I was talking about this 40,280 zone. I said that if we can clear that, we could go higher, we could test that for 40,620. I know, very close, but still it was a good target, and look how well it acted as a good area of resistance. That's the highest point of January of 2025, or should I say, yeah, it is the highest point of January 2025. Before it was the highest point of 2025. Then now we kind of surpassed that, and we created a new high for this year. Now look, if I'll jump into weekly, you'll see this clearly here. So yes, this week we created a new high, and then kind of we drifted back down. But what I keep on saying to everybody all the time, that and this one pattern that I keep on mentioning as well. I mean, I mention a few patterns all the time, but this one in particular I like probably the most, one of my most liked ones. Basically, it's when we are, let's say, at a significant level, something like, let's say, in this case, an all-time high, or highest point of this year, right? It's quite significant. So we came close to, testing that initially. We tested it, and then we shot higher, and on Monday we pushed nicely to the upside. But then the same day we failed to stay above that already previous highest point of this year, and then we kind of drifted back down. And that's the sign to me that basically there is weakness, could be weakness kicking in. And look at this, look how well this played out. I mean, we drifted then to the downside. Then we corrected back up, and on Friday today we are feeling well, not feeling the love. There we go. That would be the easier way to say it. So we have basically confirmed that there is a possible reversal happening. Again, I'm not saying that this is like it could lead to a very strong reversal, or anything. It could, but it's not guaranteed. So I'm not saying that this is like we're suddenly from here going to become very, very bearish and like, oh, sell the markets and all. No, what I'm saying is that we could see a nice correction back down, maybe towards this downside line taken from the highest point of July of 2024. So this is a good target in my opinion. I think that this downside line could be tested from above, and if it provides good support, we could see a rebound and a push back up. However, at the moment, we're just like I said, I'm taking a very simplistic approach. I would say this way: the fact that we traveled higher, we created a new high for this year, but in the same day we failed to kind of stay even above the previous highest point of this year, that kind of indicates to me that there is a little bit of weakness. We got the weakness. Yes, we got the weakness. We drifted lower and then we corrected back up. And most importantly, that when the correction happened, we kind of remained below this highlighted zone, below this key area of resistance that I kept on talking about before. And there we go. I'm currently leaning a little bit more towards the downside because, again, next week will be could be a bit of a crazy one, to be honest, because we know that we have the so-called 9th of July deadline after the 90-day pause, you know, that came or is coming to an end after the April tariffs, the so-called Liberation Day tariffs were announced. Look, Japan is one of those which are in the heat a little bit, and I'm not saying that, you know, that this is kind of that it's a big problem or something like that. I mean, it is a problem, but the problem is caused by, you know, the White House, because again, they have imposed the tariffs, right? And we can debate, you know, if it's a good thing or a bad thing. Of course, is it like more, you know, you know, the U.S. is trying to protect themselves, or is it actually more of a bullying moment? So again, we can, like I said, we can debate on this issue as much as we want, but the fact stays the fact. They decided to impose these tariffs. Now there's like the grounds have been shaken. In my opinion, I think that it's a way of kind of destabilizing the whole world around you, and kind of trying to, you know, manipulate and trying to become the superpower that you want to be. So and look, at the moment, of course, we'll see how the deals go, because again, the Japanese are thinking about this, as I understand, you know, and they're very careful, cautious, and pragmatic. But again, let's see what kind of an outcome, you know, comes from this, because are they going to agree on something, or actually is this going to kind of, you know, expand into something a little bit worse than that? So we're watching Nikkei in that front very carefully. If we can see that they're struggling to reach a consensus, then of course Nikkei could drift a little bit to the downside in a way, because again, we know that, look, the Japanese economy is relatively strong. However, it's very vulnerable at the same time. So it's very sensitive. It's strong, but it's very sensitive. So just small things can really impact the economy there, and yeah, it can turn around very quickly. And I think that the Japanese know that. So, you know, they're trying to balance it out, but again, we'll see. At the moment, of course, the fact that the Japanese yen is a little bit on the stronger side against the US dollar, like most other currencies as well. So that's also not helping the Japanese exports going into the US, because for the US importers, it's becoming a little bit more expensive to import from Japan. So again, let's see what's going to happen. Another problem for Japan in a way is that, unlike with other countries, if something goes down, if the stock market starts shifting towards the downside, everybody will start jumping into safe havens, and Japanese yen is one of those. And this way, in a way, it could hurt the Japanese economy even more, because it could hurt the Japanese exports even more, making Japanese exports a little bit more expensive on the for the global consumer. So that's where, like I said, that's where this also the sensitivity comes in. Look, we'll see, of course, how it goes, how what happens, and certainly it's going to be an interesting telenovela next week. So yep, keep grab your popcorn, and I think it's going to be an interesting one. Like I said, I think that's the only word that I can describe it. I think in general, every week has been an interesting one, and every week since the inauguration, it was just something coming up. And I mean, okay, on one hand, you increase volatility, the markets are maybe somebody might say interesting to trade. However, for investors, probably it causes instability, and for those who want to park their money for longer and just not think about it, well, it's probably not the case. Anyway, let's jump into China very quickly. China is doing okay. It's pushing higher. They kind of reached some sort of a deal. I wouldn't say like a major deal, but it's some sort of a deal. Basically they kind of calmed down the markets, their own domestic markets for now. But looking at the technical picture, yes, everything's looking quite bullish here for China 50. Look, a nice pop above this barrier, this 13,800. If we can clear that area, then yes, I'll go to the upside. So yeah, for now, like I said, we did get that pop initially. We did get that test of the 13,885 zone. So yes, this kind of worked out nicely, but I need the body of the daily candle remaining above the 13,800 zone in order to kind of go for some higher areas. Let's have a look at the US, ladies and gentlemen. Of course, the market is closed, but looking at the cash index, we're seeing a little bit of a retracement back down. Look, in general this week, I mean, okay, I'll get to the jobs data in a bit. Let me just go through the indices. The S&P went for a new all-time high yesterday. Yep, NASDAQ also created a new all-time high yesterday because, again, good numbers, good job numbers. And look at this. In the beginning of this week, I talked about this. I said to you, look, keep your eyes on this because we're not far from the all-time high. And Dow, I think that eventually it could reach the all-time high next week. So we're keeping a very close eye on it. Maybe going up until the 9th. It could reach the all-time high, or maybe on the contrary, this is like I said, it's a bit of a gamble here, or maybe it could, let's say, correct lower in the first half of the week, and then let's say we get a positive outcome on the 9th, and then boom, there we go. The NASDAQ, the indices, the Dow Jones, the S&P, the NASDAQ enjoys the moment, rallies, and everything is nice and dandy. So that's what I'm saying. That's why be very careful. Next week could be, like I said, if we do see, let's say, no action in the US indices in the first half of the week, then, like I said, keep this in mind that if there is some sort of a positive outcome, or at least a little headline, from a positive headline from the whole tariff pause and end of tariff pause, end of tariff pause, then yes, we could see a nice little kind of jump, maybe to the upside. But again, it's theory. Unfortunately, this could go either way. We can see that since around the mid or second half of June, we have been rallying very strongly. Look at this, very steep up move. So a bit of a retracement is needed. So maybe, like I said, maybe this could happen next week, like in the first half of the week. We correct a little bit lower, and then on Wednesday, Thursday, Friday, we just kind of push nicely to the upside. Let's see. Just an idea there. And then, yeah, maybe we can finally reach that all-time high for Dow Jones, because again, it seems like the S&P and the NASDAQ are kind of waiting for Dow, hey dude, are you coming over or something, the moment unfortunately that's the case. Dow is playing the catch-up game. Look, for now, like I said, let's wait. Look, for these indices, if in order for me to get, let's say, comfortable with the downside scenario at this point on the S&P 500, I would need to see a drop somewhere below this below the 6,147 territory, which basically is the highest point of February of 2025. For Dow Jones Industrial Average, a drop below this hurdle at this point in time. A drop below the 44,000 zone could do the trick here, yes. And for NASDAQ, I would like to see a kind of a drop below, also below the highest point of February of this year, and then yes, we could go from there. Let me just adjust a few lines here and there. There we go. And then yeah, we could go from there. Looking at the dollar index, and this is where I want to pick up on the data that came out this week. So let me just jump in. So first of all, let me start off with the US data. I'll just jump straight away into the US job numbers. So basically on Tuesday, we got the JOLTS, so job openings, very good, very nice number, you know, to nicely to the upside. The market kind of enjoyed that. Wednesday, ADP surprise to the downside, first time kind of since like 2020 going into negative territory. Where's that figure? There we go. That's, you know, you can get easily lost here. So so yeah, the ADP dropped into negative 33k zone here, and then everybody was speculating, and I will have to admit, I was also more leaning towards the downside for the NFP, but hey, it came out as a surprise. It came out better, the 147k. But what's interesting was I was looking at this adjustment as well. 139k it was previous, and then they adjusted it to 144k, so a little bit of an adjustment, and kind of okay. But if you look at it from that perspective, then yes, if the previous number was actually more of 144k, then you would say that actually we didn't really get much of an increase, you know. So it's good, but it's kind of flat. So that's what I'm saying. So, you know, let me just actually launch the chart here for the NFP, and there we go. So okay, let me just automate it. Yeah, there we go. So that's what I'm talking about. You see, this is my problem. This is like, we're kind of flat. We're not really, you know, it seems like we're in the new reality where you know, previously we were like in these levels where we were like closer to the 800s, 900s, you know. It was back in 2021. 2022 story was somewhere around 300, 400, and or even let's say a few points higher. Basically, roughly around, I would say, you know, 400 maybe the median. Then the story of 2023 was more of like a 200, 250 territory, probably 250 territory, and the story of 2025, it seems like it's the 150. So you see the pattern, right? It's diminishing. So my problem is that the question is actually, when we're going to go into 2026, is this going to be the moment where we're going to get even closer to the zero mark? Look, at the moment, I think nobody cares, especially in the, you know, in the government. But I think that you know, they're more focused on you know, getting the interest rate cut from, you know, from Powell, and the July meeting here, the expectation is for no cut, as you can see, basically because the numbers are quite good. So in a way, you don't need to support the economy, right? So I think that yes, the whole rate cut decision could come in September, and I think the market, yes, I'm in line with this. I mean, September could be a cut, October could be a pause maybe, and then maybe December could be a cut, you know, because look, by the end of this year, we're expecting 2 cuts. So previously there was a moment where we had like 3 cuts, but yeah, now it shifted back to 2. I mean, I would say that yes, 2 cuts could be possible, and the US dollar, and I think that the US dollar understands that, and I think we could continue drifting lower throughout this whole year on DXY. I am targeting the 95 territory still. I said it before, and I'll stick to my game. Also, from the technical perspective, you can see that we are within this little falling channel, and at the same time below a downside line taken from the highest point of highest point of February of 2025. So yes, everything seems to be kind of on the bearish side here for DXY. But I explained this several times, and I think that at the moment the U.S. government is trying to kind of benefit from that because yes, it might hurt the domestic consumer a little bit because it's more expensive to travel abroad. But in terms of the government's play on tariffs, with trade in general, yes, that is working in favor because on one hand, for the U.S. businesses, it becomes more expensive to import, and that's how maybe they're trying to stimulate production in the U.S., showing that hey, look, it's cheaper, right? It's more attractive for foreign companies to buy from the U.S. And we do understand where the main trade is happening. So we understand that military equipment is always attractive, especially at a lower price. So yeah, I would say right now, I think that's what they're kind of going for. You're arming the whole world with your slightly cheaper equipment, and it's great, right? So in that sense, it is what it is right now. The U.S. dollar, I think, like I said, it could continue drifting lower, especially if we could see more rate cuts coming from the Federal Reserve. Let's see what's going to happen. For now, like I said, I'm going to remain bearish as long as we stay below this downside line right here, which is taken from the highest point of February of 2025. The German index DAX, let's have a look. The German index is working today, and you can see that we are drifting lower. So far, look at this. By the way, this Fibonacci here on the German DAX cash index, it has been working out beautifully. We retraced towards the 79% here, and that was a big nice test. Boom here, fantastic. Then we drifted back down, remained above the 38.2, pushed back up, found resistance near the 61.8% here, and now we're shifting lower where it seems like we're going back to that 50% here retracement on the Fibonacci, which is drawn from the highest point of June to the lowest point of June. Yeah, so far so good. This is kind of, like I said, working out nicely. So for now, I would say this way. We can remove the Fibonacci. It did its job, and I think it's time to get rid of it. So what we can do now is we can take a look at this. We can take a look at the highest point of this week. I think it will remain the highest point of this week near the 24,174 zone. So we could stay in a way above. If we do, let's say, push above that area, we could stay higher. Yes, we could start moving towards the all-time high again. At the moment, of course, let's not forget that Europe is also a problem for the US because they cannot reach a deal. For now, it's a tricky moment here. And for now, if we do drop back below the 50-day EMA right here, I would say it kind of opens the door to some lower levels. Then we could start targeting this 23,000 territory. But let's not rush. Let's not rush into things. I think that the market is waiting for next week to see what kind of deals we will be getting, we'll be seeing. So yeah, I think the DAX here positioned quite well because it's also waiting to see what's going to happen next. And yeah. For the upside, I would say a push above the highest point of this week. Yep, could open the door to some higher levels, maybe even the all-time high. And for the downside, a drop below the 50-day EMA is required for me. The German index DAX here, the main index, similar story here. And I would say keep your eyes at the highest point of this week, and then we'll go from there. If we can pop above that, I will consider some higher areas. So ladies and gentlemen, let's jump into the FTSE 100. So this one was very political this week, and we saw these kind of political shakeups in UK that that somebody didn't agree with someone, and yeah, then the next day they say no, we agree, and blah 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 and stuff like that. Anyway, it's like politics, honestly. Like it's I don't know. It's just, yeah, it's just annoying. But anyway, looking at this picture here, first of all, let's get rid of this. And one thing for sure is that if you're looking for some higher levels at this point, I think I'll just gonna wait for the all-time high. I want to see a break of that 8,800 and kind of 10 zone. If we can get that nice break, I'll go to the upside. For the downside, I would like to see a drop below the 50-day EMA, and then we'll take it from there. Let's jump into the Forex world very quickly. AUDUSD, so looking good, very nice. I mean, I talked about this in the beginning of this week as well, in general last week as well. I said, look, we're in a rising wedge pattern, and the trend, while we remain inside the pattern, the trend is to the upside. I understand that rising wedges tend to break to the downside, so we would need to see a clearance here, you know. And however, in this particular case, when we see the prevailing trend is to the upside, then there is actually a good chance for this one to pop higher. But again, you know, the same thing, we need that pop. If we don't get that pop, then that's it. We continue to target the upside, but within the formation. On the downside, like I said, a drop below the lower side of this formation could be nice. At the same time, we could break the 50-day EMA, and then we could kind of take it from there. AUDJPY, very quickly, there we go. We had a pop here. I talked a lot about this. We finally cleared the range. We pushed higher. We tested the 200-day EMA, but we struggled to overcome it. Okay, we drifted back down. So in a way, I think that the market is a little bit worried. So our risk on risk off monitor, which is the AUDJPY, has shifted back into the range and basically closer to this upside line. So in a way, I think the market is just showing that they're also waiting for clarity on what's going to happen with all the tariffs. So now a good pop above the 200-day EMA and a pop above the 95.74 territory could do, or 75 territory here, could do the trick for a few more buyers. Jumping into NZD/USD here, look, what can I say? NZD/USD, it's a nice good pop above the, yesterday it declined heavily because the US dollar just rallied strongly because, again, the US dollar enjoyed the moment that the NFPs came out on the higher side. We saw this big dip in NZD/USD, but then we recovered most of the losses here. And yeah, look, for me, the upside scenario is very simple. A 0.6120, I need a pop above this. That's the current highest point of this year. A nice good clearance of that could open the door to some higher levels. For the downside, I would start looking at lower levels if we do start dropping again below the 0.6048 zone, somewhere around there. NZDJPY, I also wanted to pick up on this one. This one's a little bit probably more interesting than AUDJPY, because the AUDJPY had a little bit of a, let's say, false breakout. This one's still in line, so it's kind of you know, showing it's more stable, more, you know, balanced. So I'm looking at that 87.90 territory, somewhere around here. I'm waiting for this, in general, I'm waiting for this whole area to break. If we can break this, I'm going to go to the upside, ladies and gentlemen. This is the, oh, we cannot see it properly. Yeah, let me just lighten up a little bit. There we go. So I'm waiting for clearance of that territory right there, and then I'll go from there, basically. So let's see. The same story for the downside. It seems like we're forming something of an ascending triangle pattern, which, of course, according to all the TA rules, tends to break to the upside. But again, we've seen this happening in the opposite direction. One thing I want to say as well about ascending triangles, that sometimes you see the break of it to the, let's say, to the lower side, and it quickly then kind of maybe the next day it reverses and pushes back inside of it, and maybe, and you know, pushes higher. So basically, then you can say that on a weekly chart we had a nice false breakout, still the ascending triangle, but still a nice false breakout through the lower side of that pattern, and then quickly kind of wiped out a lot of buyers, hit a lot of stop losses, and then kind of moved in the correct direction. Look, USDJPY very quickly on this one. It's a little bit of a mess here, I would say. So yeah, it's a little bit messy. And okay, look, for me, the upside scenario, the 146.28 zone is the one, something that I'm watching. The 100-day EMA is also at an interesting spot. My next target is the 200-day EMA, and then we'll go from there. If you're looking for some lower levels, I think that let's get rid of this upside line, no longer needed. But in general, if you're looking for some lower levels, I think that you won't be wrong, because if you would say that while we remain below the 50-day EMA, I'm going to continue targeting the downside. Because again, like it's at the moment, everything is quite bearish. We're below all the EMAs on the daily chart here. And then yes, if we continue to stay below this area, below all these EMAs, then yeah, I'm going to continue targeting the downside. USDCAD, similar story, leaning a little bit more towards lower areas, and yep, so far so good. So hey, if we do break below the 1.3539 zone, a forthcoming lower low will be confirmed. Very simple. And then I'm going to aim for the lowest point of let me just double check. No, it is the lowest point of September of 2024 and the lowest point of August of 2024. So this is what I'm going to aim for. USDCHF, again, just a copy of DXY, and so far so good. We're just drifting lower. Very quickly on EURUSD, so a bit of a roller coaster ride yesterday. There we go. We've got rejected from the upper side of this this range here, and there we go. We're moving nicely to the downside. We tested the midpoint of this rising channel, rising channel, and at the moment we're seeing a little bit of a stalling moment. So again, I think that if we somehow drop below the midpoint of this rising channel, then yes, I'm going to consider a move towards the downside, towards the lower side of this rising channel. EUROJPY, it's a little bit of a messy one, but still pushing higher, so I cannot really add too much here, to be honest, at this point. Probably, you know what, I'm going to leave it. It's way too messy, and it could be a nice retracement at some point, but I don't really have like a clear area for myself right now because it's just a little bit up in the air. GBPUSD. We had a look at this. This is when that political kind of turmoil happened, in the parliament, when because of Keir Starmer, and yeah, there we go. We dropped lower heavily. Then we found support the same day near this 1.3632. We rebounded, but to be honest, yesterday we rebounded again because the dollar kind of stabilized. Initially, the dollar was strong, but then I think that the damage control by the UK government was as what has been done, and the pound remained on the stronger side against the US dollar. But still, to me, the technical picture here looks a little bit more bearish, to be honest. But again, I need to break below this 1.3632 in order to go lower. Let's jump into commodity world gold. Previously, if you remember, I talked about the idea of a rising wedge here, ascending triangle pattern. We broke the lower side, we violated it, so it's no longer an ascending triangle. Now we have to kind of look at something else. Some of the levels did not work out, so I think what I need to do is I need to kind of just play the simple game here. And look, for going into next week, a pop-up of the 3,365 territory, which is the highest point of this week so far. A pop above that could open the door again towards that 3,430.40 zone, and then yeah, we'll go from there, because that's my barrier for the upside, the gateway towards the all-time high again. For the downside, a drop below the 50-day EMA is required, because again, we did drop last week, at the end of last week, below that. On Monday we recovered and pushed back up. So hey, if we do drop below the 50-day EMA, I'm going to lean towards the downside. Silver, let's have a look at silver. Silver is stuck in range, so we need a pop here above the highest point, the current highest point of this year, near the 37.30 zone, and then we'll go for some higher levels. For the downside, a drop below the 35.45 level here could attract a few more sellers into the game. Let's have a look at palladium. It's coiling up a little bit, so we're waiting to see what's going to happen there. We're just, like I said, getting into a bit of a squeeze here. Jumping into platinum, yep, we're in a bit of a choppy moment here, so not much I can add here. I think maybe we could see this as a possible double top. Maybe we could see a little bit of a drift back down, but for that I need a confirmation drop below the 1,347.48 zone, or somewhere around there. Copper, by the way, copper drifting back down, a little bit of a shaky moment here for copper, but still it could be positive because again we remain above some of these tentative upside lines, and one of these is this one, taken from the lowest point of May, and then we'll take it from there. So long story short, we could see a little bit of a drift lower, but this is something that I'm keeping an eye on. WTI oil. So WTI oil also had a nice positive moment this week, but still remains below the 200-day EMA. Look, I said to you before that I'm bearish on this one, but I need a clearance, a drop below that $65 mark. If I can get that move, amazing. I'll consider lower areas. Let's have out of interest. Let's see if the Fibonacci kind of works out here nicely. So we take it from the peak of June to the low of the 24th of June, and we'll see that the 23.6 is working out nicely. Let's see if this is actually making a little bit more sense. No, actually this is making a little bit more sense. Well, makes sense. So for now we remain below the 23.6, so maybe actually this could result again into a nice decline, but I'm not rushing into things, to be honest, because I know because again there are renewed talks about the that the US and Israel are probably now again they continue to want to destroy Iran. So I mean, okay, and the scapegoat basically. Yeah, at the moment I think that based on the headlines of Iran headlines and what if the US is gonna again jump in and bomb, or Israel is gonna jump in and bomb because they apparently they need to, they want to, and look, it's a little bit crazy, of course, but anyway. Yeah, so look, for long story short, for now the $65 mark is the barrier that I'm watching for the downside. So if we can get a nice clearance of that, I'll get a little bit more excited with, like I said, with lower levels. Natural gas, we're approaching this upside line, the tentative upside line taken from the lowest point of April. So if we do drop and stay below the 200-day EMA, I will aim for this upside line, and then we'll go from there. Coffee still is weak, still is bearish, and that's fine, that's okay. We fell below this hurdle, this 290 zone, so let's see if we can drift further south. Cocoa, similar story, we're in a nice falling channel pattern, so I talked about this previously, so far so good. Oh, this is a little bit of adjustment that needs to be taken here. Let me just do this very quickly. So yeah, I think this is a little bit more accurate representation. There we go. So for now we're drifting nicely to the downside, and then we'll take it from there. Jumping into wheat here, yes, pushing to the upside. We remain on the higher side somewhat. We jumped above the 200-day EMA again, so in a way this is kind of increasing chances for a push higher. Sugar, beautiful rebound. Look at this sugar. What's happening here? 15.5 zone. Boom, what a jump. Let me just measure this very quickly. How much did we make here in one go? 5.5%. That's very good. Wow. I mean, yesterday it just rallied. Today it's not going to be working because the US is closed. So wow. I mean, this is very interesting. Now, is this a turnaround? Let's see. I think it could be. Cotton. Cotton. The problem here is that We are still struggling with that 200-day EMA. We're kind of looking at it, and look, on Friday we stayed above it. Monday we declined, and we tried to pick up here, and we're kind of oscillating now around that 200-day EMA. So it's not really something that I really would like it to to have here. But anyway, in general, the 200-day EMA is something that I'm watching here, and then we'll take it from there, ladies and gentlemen. So yes, for now, like I said, let's see if we can pop above it. In terms of some levels, I think some of these need to be adjusted. So we need to mark the highest point of June for sure, and if we can get a nice pop above that, I'll go for some higher areas. Let's finally, for dessert, let's jump into the crypto world. Let's see what's happening here. Look at this. Bitcoin popped above this downside line, broke it nicely. We remained above this area. So for now, everything seems to be quite positive. My next target is the 112 territory, 112,000 zone. If we can, stay above this downside line, the broken downside line, like I said, I'm aiming for that all-time high. Bitcoin Cash, now this one's interesting. There we go, looking good, potentially for the buyers, but yeah, we fell below the 500 zone. I talked about this in the beginning of this week. I said that, look, the 500 zone somehow is the area that we're watching. We need to be watching, and there we go. We fell, we dropped and stayed below the 500 zone, and now the question is, are we going to get a deeper correction here all the way towards that 50-day EMA and this upside line, or is this actually going to be something like this, like we had beginning mid-June? For now, I'm aiming lower, so let's see what's going to happen there. Ethereum, we stayed above all the EMAs, so for now I will stay above. Yeah, as long as we stay above all these EMAs, I'm leaning towards the upside. For me to start looking at some lower levels, a drop below all the EMAs is needed. Very simple, to be honest, for me at this point. Ripple is still, yes, trying to move higher. We had this nice move here. Let me just get rid of this. So look, very simple approach. A pop of the 2.33 territory could open the door to some higher levels. That's what I'm going to do. Litecoin is at an interesting spot here as well, and for now I am looking at some higher areas only if we are gonna pop. You know what? I think it's gonna be from the EMAs. Yep, there we go. I think I like those for now. Oh, sorry, I don't think I like those for now. If we can clear that and we can stay above those EMAs, I'm going to consider a move towards that 93.77 and then maybe even higher levels. Dogecoin, still within this formation between the two lines, between the two trend lines. Okay, that's fine. Waiting for an exit. Polkadot, this one's getting a little bit of retracement. However, yes, it's getting a little bit of a retracement. Yes, maybe, just maybe, we're now trading above this upside line taken from the lowest point of June. So if we continue to trade somewhere above this upside line, then I would say I'm gonna be kind of leaning a little bit still more towards the upside. For the downside, a break of this upside line is needed. The drop below the 3.22 territory is required. If we can get that move, I'll go further south. And finally, Tron. This one's amazing. I like it. I like this one. And there we go. Look at this. This one's kind of comfortably pushing above the 0.2786 territory. And well, this is where the interesting bit comes in. This is where we are, targeting this area right here. We're targeting the 0.2932 zone. That's the highest point of June, or near the highest point of June, I would say, actually. And as long as we stay above the 0.2786 territory, I'm going to continue targeting the upside. For me, the downside scenario, a drop below the 50-day EMA could attract a few more sellers here into the game, and we could aim for that 100-day EMA or even lower. Ladies and gentlemen, that is a wrap. That is a wrap. Thank you very much for this week. I really appreciate that. Thank you very much for joining in, for all your views, for all your likes and everything. Look, ladies and gentlemen, prepare for next week. Try to rest as much as possible. Prepare yourself for next week. Next week, like I said, we could be an interesting one. And for now, as always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you on Monday. Bye bye.